Hi there, you're watching Market Cafe on ET Now with me Shreyansi Singh, and with me as always is my co-anchor Snehi Shah. And over the next 1 hour, we'll take you through news and updates from within the country as well as across the globe, tell you which stocks you should keep on your radar, and tell you what the brokerages are also saying bright and early this morning. But Snehi, first things first, let's take a look at what Wall Street did then.
Absolutely, and very stellar moves coming in on Wall Street. There is no stopping for some of those indices on Wall Street. In US stock futures, let's talk about that first. They were slightly higher yesterday after the Dow Jones Industrial Average is closed at another record high. Earlier in the day, the Dow advanced 0.5% to a record close. The 30 stock index also hit an all-time high during the session. The S&P 500 also added 0.3%, while the Nasdaq gained 0.4%. Investors bet that the unsuccessful assassination attempt on former President Donald Trump would be a tailwind for the Republican presidential candidate and his party in November's election. Now, a victory for the GOP at the polls could have been the way for favorable tax and fiscal policies for investors. The markets also continued its rotation into small cap stocks, with the Russell 2000 rising 1.8% during yesterday's session. So the small cap index on Wall Street was the one to watch out for yesterday as well. Nvidia was the biggest gainer for both the S&P 500 and the Nasdaq during yesterday's trading session. On the flip side, you did have Meta Platforms that was the biggest laggard for both of these indices. Now on the earnings front, you have Bank of America, Morgan Stanley, United Health, as well as Charles Schwab all set to report their earnings before the opening bell on today's trading session US time. Traders will also watch for the latest economic data, which includes June's retail sales, an important metric, so watch out for that, and export and import price indices as well as May's business inventories. So while that was on the US Wall Street, let's also take a look at what the bonds are up to, because the 10-year Treasury yield has inched higher as traders assessed Fed Chair Jerome Powell's comments, and we'll take you through that a little later in the show as well. But on the back of that, US 10-year at 4.213%, slightly higher, though seems to have cooled off nominally as of now. So while that's on the equity and also on the bond side, let's also take a look at what the European markets are up to. And like you could see, green all across Wall Street. It's the exact opposite of that. It's only red across European markets this morning. You have DAX that closed lower by 0.8%, FTSE also 0.8% lower, and the Stock 600 has closed a whole 1% lower. Lots of pressure coming in on European stocks, so we'll just wait and see how that market pans out. But other than that, the US markets and the US handover looking largely positive, and US VIX also is up 5.3%. So that's something to watch out for. But other than that, no complaints coming in from the US. A very positive handover coming in from the US at least. But with that, Shreyansi, also take us through what commodities are up to.
Well, absolutely, and can't say no complaints for oil, because what you see with oil prices is that they fell for a second day on Monday as the dollar gained ground amid political uncertainty in the US following an attack on US presidential candidate Donald Trump, while investors also eyed the progress of talks for a Gaza ceasefire. So when you take a look at price movements, then you're looking at Brent with a downtick of about 14 cents or 0.2% thereabout, and $81 a barrel levels coming in for Brent after settling down 37 cents on Friday. Now let's also take a look at US WTI then. That was around those $81 a barrel levels, and that also saw a downtick of 25 cents coming in, or about 0.3% thereabout, and the dollar firmed on Monday, while US bond futures slipped as investors wagered the attack on Trump made his victory in the upcoming presidential election more likely. So that is also something that the market is looking at, but a stronger dollar tends to lower prices as buyers using other currencies have to pay for their dollar-denominated crude. Now, in terms of weakness that we saw last week, Brent fell more than 1.7% after 4 weeks of gains, while WTI futures also slid 1.1%. As weak oil demand in China, the world's top importer, countered robust summer consumption in the US. So that is something that the market is also keeping an eye on. And China's crude oil imports fell 2.3% in the first half of this year to about 11 million barrels per day amid disappointing fuel demand, and as independent refiners reduced production due to weak profit margins as well. So China's demand picture is also something that the market is keeping a close eye on. And in terms of other factors to watch out for, in terms of the oil market, you do have in the Middle East talks on ending the Gaza conflict between Israel and Hamas that halted on Saturday after 3 days, and the uncertainty around the volatile situation still has kept the geopolitical risk premium in oil elevated. Now, despite all of this, oil markets are broadly underpinned by supply cuts from OPEC Plus, with Iraq's oil ministry saying that it will be compensating for any oil overproduction since the beginning of 2024. So that is largely the picture coming in when you take a look at oil prices. Let's also take a look at gold, because gold prices gained on Monday, hovering near a more than 1 month high hit last week, aided by hopes for interest rate cuts from the Federal Reserve, as traders await more comments from Fed officials to gauge the timing of those cuts as well. So when you're looking at price levels coming in for gold, spot gold rose nearly 0.5% thereabout and was around those $2,400 per ounce levels. Now, mind you, non-yielding bullion's appeal tends to shine in a low interest rate environment. So chance of a US rate cut in September is really what the gold market is looking out for. But despite that, currently what we saw is gold hovering near a more than 1 month high. So those are the levels that we're looking at, Sneh.
Absolutely. Let's get it going with all the global stories that we're covering for you. And let's begin our coverage with the biggest of them all. Latest comments from the Fed Reserve Chairman Jerome Powell, saying that the central bank will not wait until inflation reaches that 2% target to start cutting rates. Speaking at the Economic Club of Washington, D.C., Powell referenced the idea that the central bank policy works with long and variable lags to explain why the Fed wouldn't wait for its target to be hit. Additionally, he said that the Fed is looking for greater confidence that inflation will return to that 2% level. He also thinks a hard landing for the US economy is not a likely scenario.
Meanwhile, more Fed officials heard backing Powell's stance more on the lines of optimism over inflation, as Bank of San Francisco President Mary Daly refused to give time-based guidance on the Fed's likely pace of rate cuts, but acknowledged that significant progress has been on inflation, and that is something that she acknowledged. Do remember, the central bank's next meeting is in about 2 weeks. Policymakers are widely expected to hold policy steady in the 5.25 to 5.5% range. So that is where policy rates are likely to remain where it has been since last July as well.
All right, and in the much run-up to the awaited US presidential elections, former President Donald Trump has selected Senator J.D. Vance of Ohio to be his running mate on the first day of the Republican National Convention on Monday. A one-time critic of Trump, Vance has now become a loyal ally. Announcing his vice presidential selection on Truth Social, Trump clarified that he tapped J.D. Vance after a lengthy deliberation and thought.
Moving on, then, Goldman Sachs had a stellar Q2 with profits surging 150% year over year to $3 billion, driven by increased fees from debt underwriting and strong performance in fixed income trading as well. Revenue rose 17% to about $12.7 billion, exceeding street estimates, with earnings per share at $8.62 as well. Meanwhile, BlackRock's Q2 also showed a solid 13% increase in assets under management that were around $10.65 trillion, fueled by net inflows as well as market appreciation. When you take a look at revenue, then revenue grew 8% year over year and was around $4.81 billion as well.
Moving on, let's talk about China's GDP, because China's GDP growth has slowed to the worst pace in 5 quarters after National Bureau of Statistics reported that the country's Q2 GDP rose by only 4.7% on a year-on-year basis, missing those expectations of 5.1% that the street had largely penciled in. June retail sales also missed estimates, rising 2% versus the 3.3% growth forecast. The organization is now pegging China's 2024 GDP growth at 4.8%. Industrial production in June, however, managed to beat expectations at 5.3% growth on a year-on-year basis.
Alright, then with that, we're timed out on this segment, but we'll see you on the other side to see how the Asian markets are faring, so you don't go anywhere. Welcome back. Thank you so much for staying tuned in. Well, as promised, let's take a look at the Asian markets then. And Asia Pacific markets opened mixed on Tuesday as traders in Asia reacted to Federal Reserve Chair Jerome Powell's comments that the central bank will not wait until inflation hits 2% to cut interest rates. Now, Powell indicated that central bank is looking for greater confidence that inflation will drop to the 2% levels, cited long and variable lags and policy effects as well. Let's take a look at the ASX 200 then on your screens. Downtick of about 0.3% coming in for that one. Now, that fell about 0.1% on its open, retreating from the index's all-time high on Monday as well, and currently it's deep in the shade of red there as well on your screens. Let's also take a quick look at Japan's Nikkei that resumed trading after a public holiday then, and Nikkei saw gains of about 0.4% there, about there. And shares of Japan's TDK Corporation, the sixth largest stock on the Nikkei by weight, jumped almost 5%, and a little bit of that you do see in the price movement on your screens as well. Uptick of about 0.4% coming in for Nikkei, although it has pared some of its gains from earlier this morning as well. But let's also take a quick look at Hang Seng then. And what the Hang Seng is also doing is a downtick coming in of over 1% for Hang Seng. And let's also take a look at Shanghai then, also in the red, downtick of about 0.4% coming in for that one as well on your screens. But you do have on the flip side South Korea's Kospi that climbed marginally. So let's also keep an eye on that one. Currently, it's paired those gains as well, but previously, just about a little while ago, it's just sort of tussling between a gain and a loss at this point, but it did gain marginally earlier this morning. Elsewhere, Singapore state investor Temasek announced plans to invest up to $10 billion in India over 3 years in the country's financial services as well as healthcare industries. So that is also an important update to watch out for. Now, back home, we shut shop around the 24,586 levels. And what we're looking at in terms of what the Nifty implied is penciling in is a slight uptick coming in on a spot basis is what we're looking at. And in terms of a futures basis also, we're not looking at a subdued start at all. We're looking at a gap up open there as well. So that is largely the handover that we have, but we'll see how that pans out for us, Snehi.
Absolutely, looking at just a 50-point uptick coming in on the spot. So let's see, because you have mixed cues coming in globally, mixed handover coming in, penciling in a rather flatter start, but we'll take a look at how that pans out over the course of the day. But let's talk about the guests that will be joining us on the channel today throughout the course of the day. And at 9:20 we'll be joined by Sanjeev Prasad, MD and co-head at Kotak Institutional Equities, and he's going to be talking about his strategy to beat the street at the moment. And it's business as usual at Quant is what Sandeep Tandon, Quant Mutual Fund, tells your channel. He'll be joining us, or we'll be relaying his conversation at 9:30. Remember, we spoke to him exclusively yesterday, the first interaction that he had since Quant MF has fallen under SEBI's lens. Moving on at 9:40, automakers will be in focus because you have Amit Jain, co-founder and CEO of Car Dekho, coming here to talk about the UP policy on hybrid cars. And also remember, last week you had major players like Tata Motors and M&M undertake price cuts, so we'll also be talking about that at length. At 9:50, we'll have Ajay Kanwal, MD and CEO at Jana Small Finance Bank, to talk about what the banking space and the banking sector and financials in general are expecting from the union budget. And keeping with that, we'll also be joined at 10 o'clock with Shantanu Sengupta, Chief India Economist at Goldman Sachs, to talk about what we can expect from the big event that's just a few days away. So, well, lots to watch out for. Very interesting conversations lined up to you. Stay tuned to ET Now. Hi there, welcome back. You're still watching Market Cafe on ET Now. Let's get a little sector-specific talk about telecom, because telecom top bosses are all set to meet Minister Scindia today, and sources say that discussions over expansion of the 4G and 5G services and budgetary expectations are on the agenda for this meet. My colleague Sumita Karir is here with more details on this. Sumita, take it away.
Right, so sources say that Union Telecom Minister Jyotiraditya Scindia is expected to meet telecom service providers today, and this is in reference to the formation of the Stakeholder Advisory Committee for Telecom Service Providers. So the likely committees are going to be the big bosses from the telecom sector: Sunil Bharti Mittal of Airtel, Akash Ambani of Reliance Jio, N. Chandrasekaran of Tata Sons, Kumar Mangalam Birla of Aditya Birla Group, Akshay Mundra of Vodafone Idea are going to be the likely attendees in today's meeting. Now, this meeting assumes significance as it's happening just right after the spectrum auctions got concluded. Tariff hikes got concluded a few weeks back, and this is also happening just before this year's union budget. So what the key asks of these telecom companies are going to be, the key challenges, those will be important. In fact, those are likely to be discussed. Also, this happens after Vodafone's fundraise and participation in spectrum auctions, which now opens the way forward for a third strong player in the telecom ecosystem. So on the agenda is going to be expansion of the already existing telecom ecosystem on 4G and 5G services expansion, the budgetary asks, and of course, like I said, the penetration of telecom services. What's important for Scindia is also going to be the efficient steering of rules under the Telecom Act 2023 within the first 100 days of the new government taking charge. In fact, this is also part of a series of meetings that he's been holding with stakeholders. In fact, yesterday as well, he held meetings with stakeholders to gather insights on the current challenges that are facing the industry, the opportunities that are there in the sector, even as India proceeds to become completely Atmanirbhar, self-sufficient in the sector. He met with satellite communications, electronic sector, OEMs, and amongst others.
All right, thanks Samita for that roundup. Now let's also take a look at what brokerages are saying about the telecom companies then. And firstly, let's take a look at what JP Morgan is saying about Bharti Hexacom. They're initiating an overweight with a target at 1,280. Now in terms of what else they're saying, they're talking about how this is the best India market repair pure play, and it also deserves a premium. Now in terms of the tariff repair, that is something that they see aiding the 20% CAGR as well, and higher underlying returns is also something that JP Morgan is highlighting about Bharti Hexacom. In terms of key growth levers then, a couple of growth levers that they're keeping an eye on stronger than peer ARPU as well as subscriber growth is something that they see as a key tailwind coming in for Bharti Hexacom. Let's also take a look at Vodafone Idea then, because Citi has come out with a note as well, and they're maintaining a buy rating with a target at 23 rupees. What they're saying is that the management is optimistic of favorable outcome, and the management also believes government remains supportive. So that is something that they're highlighting. Now, in terms of the potential reduction, they're talking about how it could be within the range of 30,000 to 35,000 crore rupees as well. So that largely is the handover coming in terms of brokerages and what they have to say about telecom as well.
All right, so lots to watch out for, especially from the telecom space. But let's shift focus and talk about what RBI has done. RBI has issued a master circular to banks, NBFCs and HFCs, which is housing finance companies, on declaring accounts as fraud. This follows the Supreme Court verdict on the borrowers' rights, and Ankur Mishra is here with more details on that. Ankur.
Yes, after almost 1 year of Supreme Court judgment on declaring account as fraud, Reserve Bank of India has issued circular to banks and NBFCs on how to identify fraud accounts. Now, in this circular, it has been stated that a fair hearing should be given to the borrower before declaring it as fraud. Remember, in the 27th March judgment of Supreme Court, it was stated that a fair hearing should be given to the borrower as well before declaring it as fraud, and now this has been incorporated in this circular. In fact, this circular maintains that 21 days should be given to reply of the show cause notice, which will be served for declaring the account as fraud. Now, what are other new things? The lender fraud risk management policy shall be reviewed by the board at least once in 3 years. Apart from that, banks are also required to constitute a special committee of the board to monitor and follow up on the fraud cases. Apart from that, banks are also required to have a framework for early warning signals. These are red flag accounts which are declared by the banks as and when they see there is a problem with the account. It is updated on the Credlix platform, which is there of Reserve Bank of India. Now, the aim is to strengthen the internal audit as well as controls of the board, and also use the data analytics before declaring the account as fraud.
Alright, thanks Ankur for that update coming in. Moving on to some important commentary then, as India continues to rise, we're set to become the 6th largest insurance market by 2032, and that's the word coming in from Kiki Mistry, chairman at HDFC Life. At the annual general meeting, he also talked about the potential for growth in Tier 2 as well as 3 cities. Listen into what else he had to say then.
According to Swiss Re, India is one of the fastest growing insurance markets in the world and is forecasted to be the sixth largest market by 2032, ahead of Germany, Canada, and South Korea. Currently, we are the 10th largest insurance market globally. Being a largely underinsured market, India has huge potential for growth. The overall life insurance penetration in India is fairly low at 3.2%. Given the low insurance penetration in the country, expansion into Tier 2 and Tier 3 cities is expected to further drive growth.
All right, that's the word coming in from Keki Mistry from the AGM of HDFC Life. But on that note, we'll slip into a short breather on this edition of Market Cafe. We'll be right back with more stock-specific news and updates, so you stay tuned. Hi there, welcome back. Let's get a little stock specific now. Talk about an earnings candidate, and these figures came yesterday post market. I'm talking about Jio Financial. Let's deep dive into its Q1 performance and take a look at what these numbers look like, because the numbers prima facie look largely flat but are still largely in line with what the street was expecting. Revenue has come in at 417.8 crores versus 418.1 crores, which is rather flat when you take a look at it sequentially. Profit after tax also at 312 crores versus 310 crores, up just 0.5% on a sequential basis. So very flat moves coming in on revenue and PAT as well. But let's take a deeper dive and take a look at what Jio Financial has done in Q1 and what this quarter has shaped up to look like for this company. When you take a look at the lending business, the device financing and loan against mutual funds, this segment has been launched in the quarter that went by. Also, loan against property and securities is a segment that they're planning to launch soon. So all eyes will be on this stock and the company going ahead based on what action they take when it comes to this plan. When you take a look at their payments bank segment as well, 1 million plus CASA customers and roughly 500,000 Jio Finance app downloads have taken place since launch. So that's a key positive coming in for Jio Financials. Moving on, let's also take a look at their insurance partnership, and they've launched auto and two-wheeler digital insurance, and they're offering policies of 31 companies versus 29 last quarter. So slight addition over there as well, another mild positive coming in for Jio Financial. Now let's talk about their joint venture with BlackRock, and this is a key positive coming in because on the back of this, a key leadership in the market has been identified for this company. Infrastructure and tech platforms are in advanced phases of development, so that's another key positive. And the GTM strategy and building blocks too are in advanced stages going ahead. So looks like a lot is in store for Jio Financial going ahead. But well, yes, when you take a look at Q1 numbers, you have PAT and revenue that have come rather flattish sequentially. And lastly, let's also take a look at the valuation when it comes to this company. The price to book is as of now at 1.6 times based on the net worth that has been shown on the books, and net worth which can be deployed as of now is at 24,400 crores, which makes the price to book at 9.3 times. But based on what the net worth is in the books, price to book at 1.6 times, that is how the street is valuing Jio Financial as of now.
Well, absolutely. We'll keep an eye on Jio Financial Services on the back of all of that, but let's also keep an eye on Bajaj Auto, because that is all set to come out with its Q1 earnings. And in terms of what's being penciled in, both top line and bottom line are expected to jump on a year-on-year basis. We have my colleague Srishti who's standing by to tell us what else the street is penciling in. Srishti, good morning. Over to you.
So from Bajaj Auto, we are indeed expecting a good set of numbers because there has been a 7% volume growth jump on a YOY basis in Q1 of FY25, and apart from that, because of the higher average selling prices as well, that's expected to support the margins of the company. But overall, the product mix has seen an improvement because the 100cc bike segment contribution has been on the lower side. Apart from that, the two-wheeler as a whole, and especially the domestic markets, were supportive enough, and all these could factor in on the numbers of the company. When we talk about the revenue, there we are expecting a 2% jump sequentially. 11,724 crores is the expectation. Although EBITDA is expected to be just flat on a sequential basis, but there could be a jump of 19% on a YOY basis, and 2,331 crores is what we are expecting. Margins once again expected to be near that 20% mark. And lastly, from the profit figure, our expectation is of 1,928 crores. So a good set of numbers expected, but apart from that, The key to watch actually will be the management commentary and the booking number for the CNG bike that the company did launch recently. If they share the number, that will be very interesting to watch out for, because there has been a lot of excitement, but how it is looking into the number side, what sort of a booking the company is getting, we will be watching out for that. Apart from that, the company is on the expansion spree for their EV dealerships. What's the update there, and overall demand, how do they look at going forward? We will be watching out for all of those. So good set from Bajaj Auto expected, but the key to watch will be the management commentary.
Right, all eyes will be on the management commentary because largely Street is expecting a good set to come from Bajaj Auto. Thanks Shrishti for taking us through that. Let's move on then, and we're now being joined by my colleague Gaurav, who has a list of all the stocks that brokerages are flagging off this morning and the ones that could be expected buzzers today. Good morning Gaurav, take it away.
Well, yes. First, let's begin with HDFC Life, because as we know that this company came up with the numbers, and now brokerages are being a little bullish because Goldman Sachs has maintained their buy rating and increased the target price to 765 rupees. Now, what they believe is that the numbers are actually in line with what the street was expecting. Other than that, ULIP products actually drove some kind of growth in the company. And when we talk about non-bar business also, that also showed some kind of positive impact on the company. And lastly, when we talk about retail production, that continued to grow, which is again positive for HDFC Life. Next, let's talk about Varun Beverages. As we know that this company is foraying into the Africa market with manufacturing of the new plants, and on back of this now Morgan Stanley has maintained their overweight rating at the target price of 1701 rupees. What they believe is that they are expanding their product portfolio, which is again positive for the company. Addition of the product portfolio is again positive for revenues as well. And when we talk about gross margin, this portfolio actually offers better gross margins, and on back of this they are being bullish on this company as well. Lastly, let's look at some of the mid cap sector, because Jefferies has come up with some of the more insights about this sector. When we talk about cables and wires, what they believe is that their channels suggest that there have been price hike of around 9 to 10%, because we have seen copper prices increasing almost more than 15% in Q1 FY25 itself. When we talk about pipes, they have also seen some kind of price hike in the PVC segment as well, in the tune of 7 to 8%. But when we talk about average prices for Q1, that has been lower on a YOY basis. When we talk about company specific, now we know that Gujarat Gas has hiked the target price. Gujarat has hiked the prices for the product almost by 7%, and that is why this can impact Kajaria Ceramics in Q2 FY25. And lastly, they also believe that Pidilite's operating profit margins can continue to benefit in Q1 because of softening VAM prices. So there is some interesting insight coming up in the mid cap segment as well from Jefferies. So definitely watching out on all these counters on back of the brokerage notes that we have in the morning.
Absolutely, Gaurav. Thanks for that update. So we'll keep an eye on all of those counters on account of their brokerage notes and what the brokerages had to say about them. But let's also switch focus to other stocks that you should keep on your radar then. And Ria's standing by with just that list. Ria?
Good morning, Leslie. In focus today, we had a lot of companies reporting their Q1 FY25 results yesterday. First up is Styrenix Performance Materials, which reported very good results on a year-on-year basis. The revenue saw good growth and the net profit jumped over 89% over the previous year. We also have Hudson Agro Products Limited reporting a good set of numbers. Good growth in revenue and EBITDA on a year-on-year basis. The net profit also saw a very significant jump of over 63% on a year-on-year basis, and the EBITDA margin also saw an expansion of 285 basis points over the previous year. Angel One has also reported their Q1 FY25 numbers yesterday, a jump of 74% in the revenue on a year-on-year basis. The net profit and EBITDA also saw good growth, but the EBITDA margin saw a contraction of about 621 basis points over the previous year. And lastly, SpiceJet has also reported its year-on-year, its Q1 FY25 earnings yesterday. The revenue went down by around 17.4% on a year-on-year basis, and the net loss came in at rupees 298 crores in this quarter versus a profit of rupees 110 crores in the previous quarter. Let's move on though to Century Textiles. Birla Estates Private Limited, which is a wholly owned subsidiary of the company, is set to expand its footprint in the NCR region with a strategic land acquisition, and it is a 5-acre land parcel with a development potential of around 10 lakh square feet, which is expected to generate a revenue of around 1400 crores on a year-on-year basis. Let's also talk about Vedanta. They've launched their QIP of rupees 8,500 crores yesterday. Let's move on though. Sources say that the Coal Ministry has signed agreements for 3 coal mines, and NLC India and GMTC have emerged as the successful bidders in this bid. Let's also talk about Unichem Labs. The US FDA has closed an inspection with 5 observations at their Goa formulation unit. And lastly, some telecom companies are going to be in focus today since the Supreme Court is going to urgently hear a curative petition against an earlier court order regarding the AGR dues. And on the back of this news, Vodafone Idea and Bharti Airtel will both be in focus today.
Thanks for taking us through that list of all the stocks. Let's get a move on then. And with the surge in demand of Apple products in India, the company's sales have soared to nearly $8 billion. The demand comes after Apple expanded its market in India with more production and operations of its 2 flagship stores. My colleague Sumita Karir is joining us once again with all of those details. Sumita.
Yes, reportedly, Apple's annual sales in India have hit a record of almost $8 billion. And this really underscores India's importance as a country that is relevant for Apple, where the iPhone maker now assembles phones, manufactures phones, exports phones, also has 2 flagship stores. Remember, its revenue jumped about 33% in the past 12 months through March from $6 billion a year. In fact, Apple's pricey phones, or premium phones, most interestingly, accounted for more than half of the company's sales. iPhones, remember, make up about 3.5% of $690 million smartphones that are in India, according to Counterpoint Research. However, Apple is looking at increasing that base, increasing that numbers as it pivots towards India. And looks at India to diversify its manufacturing and supply chains beyond China. India is also a very strong mobile phone market. Consumers are going in for premium smartphones as well. So this is a growing market for Apple as well. Now, according to Counterpoint Research, India's share for Apple has grown to around 14% at present, and Apple wants to increase that even further. Now, India, of course, signals a steady progress. The increase in these recent numbers, it really signals steady progress in Apple's efforts to win users in the country. Like I said, consumers are gradually moving towards more premium phones. And of course, we have the domestic dividend as well. So Apple doesn't want to miss that market, doesn't want to miss this opportunity. And like I said, Apple has been rapidly expanding its manufacturing push. As of now, it is producing iPhone 15, the latest iPhone 15 in the country.
All right, thanks Sumita for that update coming in on Apple. Moving on to some important commentary then. Even as IT stocks pick up pace on the back of interest fueled by companies and their performances in Q1 financial year 25, Quant MF's Sandeep Tandon remains cautious on the sector. Let's listen in to what his rationale is and what else he had to say about the space then.
It was in September 2023 itself when you saw extreme sort of neglected phase and some capitulation happened, something similar happened the beginning of the year also, when the majority of the analysts downgraded by the end of first quarter of 2023, okay, 23-24. That's the time we saw cap. But I will also agree that when you look at from the earnings visibility point of view or traction point of view in the business, still on the lower side. Okay, so because cost cutting happened, margin expansion happened, and US market has also recovered. So some signs of early signs are there, and that's the reason since the stock was trading in the most neglected territory, and they have recovered significantly. We have been I will not say I'm extraordinarily bullish in this space, because we see that risk-adjusted opportunities are far superior in other sector, because this is a more of a pullback rally, more of a reflex rally. I will not call it that something has changed from a longer-term perspective. So we are constructive, but we are not as optimistic for the sector as it was there in September 2023. PSUs were relatively cheap. They are fairly liquid. If I want to exit or build a position in any of the PSU, the liquidity is extraordinary. So which was not the case few years back. So I will like to play this thesis, when that's the reason we went overboard and build a large exposure or maintain our large exposure toward this space, because they are fairly liquid, fairly attractive in terms of valuation point of view. Impact cost was on the lower side, and they were trading in the neglected territory.
All right, that's the word coming in from Sandeep Tandon. Let's move on then. And PSU counters continue to be investor favorites, with defense and railway stocks leading the charge when it comes to returns this year. But how has the street's view of this sector changed from June lows versus now? Sandeep Tandon maintains a constructive stance on that sector. We just heard on that. Let's Also, get a move on then and talk about what the street is expecting from the budget. With the budget just a few days away, all eyes will be on FM Sitaraman and whether her budget will deliver on stakeholder expectations. Targeted spending, infra revamp are some of the things on the anvil. We've lined up some expectations from some key market players and industry voices. Let's hear out views from Sridhar Sivaram, Manish Sonthalia as well as Surendra Goyal.
I think everybody, including SEBI, Reserve Bank and the Finance Ministry, is worried about the options and futures volumes. And I won't be surprised if something in that comes which can dampen the volumes and the sentiments in the market. See, I think they have 1 lakh crore extra from the Reserve Bank. I don't think they move from the fiscal deficit target of 5.1. I think they are also committed to 4.5 fiscal deficit for next year. So I'll be very surprised if they make any changes as far as fiscal deficit is concerned. We could see some bit of reduction in taxation for the middle class. There could be some, schemes for subsidy or something of that sort.
Realistic expectations on the real GDP growth translating into revenue growth, which will be reasonable. I think FRBM targets and some stiff targets to be set for FY26. For FY25, we are working with 5.8%. I hope this glide path to lower down sharply to around 5.1% in the next 1 year. Impetus on, balance sheet expenditure of the government to, accelerate infra spending. Middle class, if there was not to be too much of tinkering in direct taxes, that would alleviate a lot of pain, and some additional allowances on the personal income tax, plus rationalization of GST on a few items.
I think there are 2-3 ways to think about it. Firstly, from a government's ability to do things perspective, I think they're in a very comfortable position. So to that extent, if you look at the last 10 years, there has been a huge focus on infrastructure, on like anything to do with public capex. So that focus, I think, will continue. I think there is room to do a lot on, say rural land and consumption. So I think there is a lot of room to do on this year, for example, given where the government's finances are. So things look pretty comfortable from that side.
Alright, and that was the word coming in from experts about budget expectations. But let's move on beyond the world of stocks, shares, budget, etc. 3 army jawans and an officer who were critically injured in a gunfight with heavily armed terrorists succumbed to their injuries in the Doda district of Jammu and Kashmir. A terror group in the Kashmir Valley has claimed responsibility for the terrorist attack. Moving on to some weather updates then, the IMD has predicted heavy rainfall and thunderstorms in parts of Maharashtra, Kerala and Konkan, Goa. The weather agency has issued a red alert for Raigad and an orange alert for Mumbai, Thane, Palghar, Ratnagiri and several other districts as well.
Alright, let's move on to some sport updates. And defending champions Argentina have won a record 16th Copa America title by beating Colombia 1-0 thanks to an extra time goal from substitute Martinez. However, Lionel Messi suffered a serious injury during the game, bringing an end to what is likely the 37-year-old's last international tournament. Well, on that note, it's a wrap on this edition of Market Cafe. From Shreyan Sini and the entire team that put this show together, thank you so much for watching. But as we bid you goodbye, you still stay tuned to the channel because the market takes all of that action ahead.
If you like this video, then like, share and subscribe to ET Now.